Hi, my name is Christina Robinson, and welcome to another edition of CMS Forex News. Today is Wednesday, February 27, 2008. New Zealand business confidence took a step back in February, registering a negative 43.9. The service, retail, and agricultural industries dominated the fall in sentiment. In a separate release, building approvals recovered in January, posting a 3.3% increase. The New Zealand dollar continued to rise to new highs versus the U.S. dollar since being allowed to trade freely 23 years ago. Turning to Germany, a leading measure of consumer confidence held steady in March at 4.5. The German economy is being resilient in the face of a U.S. slowdown, as noted after yesterday's better-than-expected business confidence. In a separate release, inflation of imports was up 0.8% for January, higher than expected. Surging oil costs were the main culprit in driving up prices. The data signifies the problem the European Central Bank has in front of them in terms of battling high inflation. The revised version of UK GDP did not change from its initial release on January 21st. The 0.6% increase for the fourth quarter is the slowest pace in more than a year. A major contributor to slower growth was a reduction in consumer spending and a decline in investment. In the U.S., orders for durable goods declined 5.3% for January. The data points to a reduction in orders for transportation, especially orders for commercial and military planes. Capital investment also declined compared to an increase in December. Orders excluding transportation saw a 1.6% decline. New home sales, coming in at an annual pace of 588,000, disappointed forecasts and fell to the lowest level in 12 years. The housing market has not shown any signs of bottoming. The euro-dollar pair continued its rally from yesterday, which broke the 1.49 resistance. The pair was up 140 pips by 1 p.m. for today's session, and the pair has climbed around 340 pips since yesterday's low. Bernanke gave a dovish speech in front of Congress and sent the pair into new record territory, breaking past 1.51. Looking at a daily chart of the pair, we see that it has tested resistance at 1.49 3 times prior to this week's breakout. Since February 7th, the pair has climbed around 650 pips to break this barrier. The pound-dollar pair hit a session high at 1.9970 prior to the release of the UK GDP data. The pair then lost momentum, and the dollar was able to mitigate some of its earlier losses. The change from yesterday's low to today's high was around 300 pips. The pound-yen pair declined around 200 pips from its overnight high, accelerating its losses after the UK GDP report. It recovered slightly during New York trading as investors were rallied by prospects of further interest rate cuts from Bernanke's testimony. Today's losses undid the gains the pair had experienced the first half of the week. The Canadian dollar is another very strong performer this week. Looking at the U.S. dollar-Canadian dollar pair, we see that it has moved 340 pips in favor of the loonie. Record oil prices as well as the interest rate outlooks favored the loonie against the U.S. dollar. Tonight, Japan will post data on industrial production and retail sales. Overnight, Switzerland will reveal its employment situation. Tomorrow, the U.S. will unveil fourth-quarter GDP figures and weekly jobless claims. And that wraps up news for today. Join us again tomorrow right here at CMSFX.com.